And now I believe it's time for that dose of smart data. Nobody in the region does it better than Philip Bahoushi, the founder and the CEO of Magnet. Philip?
Thank you. Good morning. Clearly a very tough act to follow after His Excellencies. Thank you very much to everyone for having me here today. Right, so I was asked by Walid to kind of give an overview of the state of the ecosystem in terms of venture capital, with a view of trying to make it positive. And while I will try to do that, I caveat the fact that that's very difficult to do in the current economic environment. By way of introduction, my name is Philip Bahoushi. I'm the founder of Magnet, and we're a data platform focused on venture capital across emerging markets. So think like PitchBook or CB Insights, but Africa, the Middle East, Pakistan, and Turkey, and I'm excited to say that we're going to be launching soon in Southeast Asia. A little bit of a snapshot of the state of data that we cover, but let's take a little bit of a look back at what's happened in the last 15 months. So if we call a spade, it's been a challenging environment. Both His Excellencies mentioned the challenges that we've seen in the current economic environment, the Russia-Ukraine war, soaring inflation, monetary tightening, tech layoffs, collapse of Silicon Valley Bank, et cetera, et cetera. What has that basically led to? Well, number one, we've seen these soaring inflation figures that are global. IMF continuing to see higher and higher numbers, slight corrections in the last couple of quarters. As a result, interest rates continuing to drive up. Even yesterday, this slide is not updated, as of yesterday, a further rate increase. And so what does that basically mean? I'm literally taking this from the All In podcast, something that I obsess about and highly encourage for anyone that wants to listen to the state of venture capital globally. But the crowding out effect of innovation, and how does that impact venture capital? With interest rates now getting close to 5.5%, corporate bonds able to offer 8 to 10%, your expectation as an investor for market returns needs to be about 15% from the stock market. And then consequently, what does that mean for venture capital? You need to expect companies to be at least achieving 25% year-on-year growth. And hence, there ends up being a crowding out effect. And conversely, we've already seen that impact happening in the public markets, where effectively, from the peaks that we saw only a couple or 12 months ago coming down, slight corrections at the beginning of this year, but still extremely volatile. And that's impacted the private market space. So what does that mean? Specifically, I'm going to look at the first couple of months of this year. If we look at what we coin as the emerging venture market space, so Africa, the Middle East, Pakistan, Turkey, year on year, we've seen a 67% drop in the amount of capital that was being deployed and a 40% drop in terms of transactions. But let's contextualize that. The USA, a 56% drop in terms of capital, and 65% in Europe. Other emerging markets. Now, I caveat the fact that Asia includes a whole host, and we're using CB Insights as a benchmark here, including India, Israel, Southeast Asia, and China, a 67% drop. And LATAM, 80%. So an equivalent emerging venture market like LATAM sees an 80% drop in investment capital. And yet the MENA region sees 13% and Africa 58%. And so what's happened in the MENA landscape? The positive is that you only need to go back 10 years to see almost an exponential growth, both in terms of the number of transactions and the capital that's being deployed. A 37% CAGR over 10 years. But the last couple of quarters have been much more volatile. Almost a drop going back to 2018 in terms of the number of transactions, and when you remove the black segment, mega deals, deals that are more than $100 million in value, going back to almost the beginning of the pandemic era. But that's not completely dissimilar, again, to the global markets. So if you look at CB Insights, they've seen 5 consecutive drops of deal flow and funding at a global level. What we saw was a slight shift to that starting in Q1 of last year. But what we have seen is continued acceleration or at least continued deployment in mega deals. This year alone, 549 million deployed in companies that have raised more than $100 million in the region. But I want to try and look at the positives. So we've tried to identify 4 specific opportunities that we see in this current turbulent market. Number 1, a sweet spot for Series A. 2, fintech, clearly the industry of choice for many investors. 3, tracking the geographic market winners in the markets that we're in. And 4, M&A opportunities. So the Series A sweet spot. Why are we saying that? Well, this chart looks at mega rounds versus the rest of the investment landscape by quarter. They're clearly taking up a larger percentage of the overall landscape in the last couple of quarters, showing the decline of less than $100 million investments. And here you'll see, Magnet now has valuations of all of the companies on the platform, but a view of the mean deal size across the different geographies, broken down UAE, Saudi, and Egypt. At a mean level, somewhat skewed by these outlier mega deals, you'll still see that they're quite high. When you look at it at a median level, you see again that we're going back to levels of early 2021, if not before. Conversely, that leads to lower valuations as opportunities for the liquidity that's been pumped into the market coming down. Break that down by stage, and you can already see at every single stage a drop in the mean and median deal size of companies that are receiving investment at the first 3 months of this year, lower than historic levels. And why is that a sweet spot? Well, ultimately, this being a breakdown of all of the investments by the number of deals and stage, investors have moved away from late-stage investment to slightly earlier stage investment. Now, not the earliest stage, i.e. pre-seed investments, but seed and Series A, $1 to $5 million ticket sizes, where product market fit has been proven, has become an interesting space for investors to give companies that are able to show unit economics grow out of the current challenging economic environment. Fintech. It's very clear to see, this is just the beginning of this year alone, fintech remains the industry of choice of all investors for MENA-based startups. In fact, in terms of capital, except for e-commerce, which now somewhat skewed, and I put at the top the mega deals by Nat's deal, received the largest investment in terms of capital being deployed. And you're actually seeing large deals taking place. These are the top 5 disclosed deals on the left-hand side in terms of capital in the last 15 months. And yet, fintech companies are becoming more and more prominent as late-stage investment opportunities. And given the infrastructure play and the opportunity for disruption, this remains an interesting area across the emerging venture market space. Geographical markets. If you just look at 2022 compared to 2021, the number of transactions across the big 3 in our region, Egypt, UAE, and Saudi, has somewhat normalized. In fact, they're very close together. Turkey outstripping when you look at the wider market. And in terms of investment capital, Saudi while UAE in the region remains the number 1, Saudi was the only one to grow 72% year on year. What does that mean for startups? Clearly, the hubs for investment capital that you look to raise remain the UAE and Saudi Arabia. And even when you look at the beginning of this year, Saudi is beginning to show itself as one of the leading economies in terms of venture capital activity, seeing more investment capital than any other geography. So I think, again, when you're looking to raise as a startup, it's becoming very clear that there are specific hubs in which you need to be seeking investment and speaking to investors. Finally, M&A. I spoke about the valuations and the come down in valuations. We've talked about the importance of unit economics. Well, with valuations coming down, the opportunity to identify M&A across geographies is better now than ever before. Now, some people say that we're an ecosystem instead of an ecosystem. That will involve a lot of conversations with founders to be able to understand the opportunity of consolidation. But what we did see last year was a record number of exits. We spoke extensively on the opportunities of IPO as well as the challenges of IPOs here in the region. M&A seems to be the route for acquisitions and consolidation in the market. And we've already seen some taking place this year. And we expect that this year, come end of year, will be a record year of acquisition and merger activity. Most importantly, the thing that we like to stress, cross-geographical cross-pollination, i.e. companies within one venture market expanding into another venture market. And another thing that I'd like to go into just quickly, how Magnet can help, but we're now going into Southeast Asia. And I want to touch on the visit that I went to. I was in Singapore just last week. The opportunities across geographies is better now than ever before. In fact, WeGo, one of the companies that are here in the portfolio company, talked about their expansion from Singapore, Indonesia, Malaysia, that then operated in Saudi Arabia and Egypt in the UAE, and sees profitability, or at least unit economic growth, by being able to operate cross geographies outside of the boundaries of the ones that we already consider. And this is something that I think in the current environment that we're in is something that is ripe for disruption in the next couple of months, if not years ahead. Just a couple of the areas that we can support you. For anyone that's interested, I'll be here for the rest of the day, and there's a couple of team members, but we're here to support whether you're a government entity looking to do benchmarking, any entities that are looking to do venture capital due diligence, corporates looking to do business development acquisition, and any of the service providers. I think my time is up, so I tried to keep it brief. Thank you very much, but if there's any questions, I'll be around for the rest of the afternoon. Thank you.
Thank you, Philip. I think Philip was clear. The VC winter is already in the region, yet he pointed out the interesting opportunities, seed to Series A funding. He called it the sweet spot in the fintech space, which remains the sector of choice. Fintech becoming prominent as late-stage investments, merger and acquisitions. This is a space to watch in light of declining valuations. And finally, the opportunities that could be present in cross-geography expansions.